Hello and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts to help you better. But before that, let's have a look at what the markets are up to. So Cheryl, a sharp fall coming in for the benchmark indices and look at the casualty in Z Entertainment. That's down about 15% as of now.
Absolutely. A very good morning to you, Shrishti. Not a great morning coming in for Z and especially Z holders, stock holders right now. As you can see in the flash on the bottom of the screen, you have BSE notification that's come in just now on Z. Remember, it was locked in the lower circuit about 10%, and what BSE notification is stating is that the dynamic price band of Z is being flexed in equity and equity derivative segment from 10% to 15% downwards at 11 a.m. and dot at 11 a.m. you saw that for circuit filter opening, and it's now again locked in the lower circuit of about 15%. That is Z Entertainment for you. Reason being that the Sony Group has terminated the merger with merger of the India operations with Z Entertainment. That was seen as a key trigger for Z, but now, as you can see, since the deal is not happening, it's fallen through. The stock is down about 15%, one of the biggest casualties in today's trading session. But let's take a look at what the benchmark indices are doing, because that picture also is not looking that great, given the fact that we've raised approximately 1% from the day's highest point when it comes to the Nifty. Nifty Bank, in fact, has fallen much more than the benchmark indices at this point in time. Nifty is sub that 21,600 mark. You have Nifty Bank that is seeing a fall of approximately 1% right now. Remember, it had seen a good opening at start, is given up, I think, about 1.5% from the day's highest point. That is the Nifty Bank for you. The advanced decline ratio, however, is still tilted in the favor of gainers, but that's bound to change, looks like it as of now. Talking about the list of gainers, there is the pharma index that is actually firing on all cylinders, given the fact that Cipla has come up with spectacular earnings, and that sort of an impact is trickling down to other pharma majors as well. You have Cipla and Sun Pharma as among the top two gainers when it comes to the Nifty. Bharti Airtel, ICICI Bank, Power Grid are the other set of gainers, while on the losing front is HDFC Bank that's falling quite sharply today, 2.5% downtick coming in for HDFC Bank once again. Coal India, Britannia, ONGC, Asian Paints are the other set of losers in trade. Let's take a look at the sectoral indices. Then is the media index that's down about 6%. Realty, PSU Bank, oil and gas are the key losers, while pharma and IT, they are holding on to gains today. So yes, that's the way how the markets are looking like at this point, but definitely a stock specific market for now, at least, Shrishti.
Well, yes, but firstly, let's talk about Z Entertainment then, because as you were rightly mentioning, that 15% lower circuit is what we are seeing on Z Entertainment. And not just that, after the call-off of the deal, a lot of brokerages have downgraded the stock post the merger setback. So what's the way forward for Z Entertainment and what the investors should do at this point in time? That remains the key question. So let's get in more details on this. Firstly, what's the way forward for Z Entertainment? And for that, Somit is joining us. So Somit, what's the analysis saying that what could be the next step for Z?
Well, after a lot of speculation, finally the announcement is out and this merger won't be going through. That's what Sony has said. Now, firstly, let's try and understand what could be the potential reasons why this merger would not be going through. Firstly, if you see, the industry dynamics has changed a lot since the time the merger was announced until now. In fact, because of the change in industry dynamics, the profitability of Z Entertainment has also come down sharply. Now, since the announcement of merger, if you see, Z's EBITDA and PAT has declined by around 38% and 48%, that is over FY21 to FY23. Apart from that, a few of the subsidiaries that Sony had specifically asked Z Entertainment to shut down and to stop dealing with them, that had not gone through. Now, if you see, even after Sony's request, Z did not close or divest these subsidiaries. Now, Z's investment in Margo investment was still appearing in the books, and as part of the merger agreement, Sony wanted Z's Margo investment to be disposed of and not included in the merged entity, but as of date, the matter was still not closed. Apart from that, there was this issues with the appointment of Mr. Punit Goenka. Now, as per the earlier agreement, he was supposed to be the MD and CEO of the merged entity, but because of the SEBI's ongoing investigation, Sony had clearly mentioned that Mr. Goenka could not be a part of the merged entity. Now, there were a few news reports that he denied from resigning from the board, but interestingly, Z yesterday said that Punit Goenka had agreed to step down as the MD and CEO of the merged entity. So we still do not know what is the clarity on that part, but these are the potential reasons why the merger might not have gone through. Now, as a stock, if you see, Zee Entertainment has more or less become a trading stock than an investment stock. After the termination of this merger, nearly 10 brokerages have downgraded their rating to either neutral or sell on Zee Entertainment from a buy rating earlier. The consensus target price of the analyst had come down, or had come very near to the current market price. It's now around 15% only higher compared to what it was there earlier. But this 15% higher is also because of the today's downfall that we are seeing in the Zee Entertainment prices. Earlier, if you see, the consensus target price was nearly 40% higher compared to the current market price. Now, the key question here pertinent for Zee Entertainment is what's the way forward. Now, what we spoke to experts, we scanned through a lot of brokerages, and what we understand is the first thing is that legal proceedings will continue to hamper the stock prices of Zee Entertainment. Now, there's this battle with Sony over the non-compete fee. Then there is ongoing legal proceedings by various creditors on the SL Group. And earlier, Zee had also signed an agreement or contract with Disney for sub-franchisee of sports right now. Analysts and experts believe that Zee might not be able to fulfill this commitment, given that when this agreement was signed with Disney, there was a potential merger happening with Sony. And now, given the fact that that merger is not happening, this commitment might not also be fulfilled by Zee Entertainment. Apart from that, what brokerages and experts are expecting is that there could be a potential M&A going forward. A white knight might come forward for Zee Entertainment and might look to acquire Zee Entertainment. There could be a potential hostile takeover also for Zee Entertainment, given the sharp fall that we are seeing in the share prices. And the leading candidates who could be up for this takeover or could be a white knight for Zee Entertainment are the Ambani Group and the Adani Group. Apart from that, what brokerages and street is expecting is that there would be a definite overhaul when it comes to the board and management of Zee Entertainment. Now, this is because the promoter holding is as low as just 4%, and only 51% of the shareholder vote is required to remove a director or to change the board of the company. And what street is expecting is that there could be a likelihood of a quick action from the non-promoters going forward. So keep an eye out for Zee Entertainment. A lot of action is still expected in the stock going forward.
Absolutely, a lot of action already taken place as well in the stock. Thank you so much, Soumit, for actually rightly articulating what exactly happened, what may have led to the deal falling through, also what brokers are saying, and what may be the step forward coming in for Zee. Thank you so much, Soumit, for that analysis coming in for Zee Entertainment. And let's bring on board our guests for today. We have Kunal Bothra as well as Rajesh Agarwal joining us on the show. Very good morning to you, Kunal, as well as Rajesh. And Rajesh, yes, we all were expecting we wanted the news to be out soon because this was actually lingering for a while now. You had a lot of talks on either of the sides, and maybe the deal will go through or may not go through, may not had more weight actually when you talk about the way how things were developing of late. Now that finally we have clarity on it, that the merger will not take place, what should investors do in particular, given the fact that I'm sure there are a lot of investors now trapped in the stock, isn't it?
Good morning, Cheryl. Good morning, Srishti. Good morning, Kunal. You said it right. A lot of investors have been trapped. But I think our viewers would recall that I have always maintained that when there was so much of uncertainty in Zee, one should have avoided that. I have told repeatedly so many times on media platforms. But still, going forward, what we see in this deal is that now that the deal has been terminated, the $10 billion dollar deal, I would say, uh, this is a major setback for the shareholders because most of the shareholding has been being held by institutions, and now we need to see how they react to this because they are the major shareholders holding around 70%, if I'm not wrong. As far as the operations of Zee is concerned, GEC, it was majorly into GEC segment that were doing well. Some of the program were having a good TRPs, and then it's almost debt-free company, but we see receivables going up. And we now need to know how the promoters, who hold only 4% of stake in the company, how they react to this going forward, and what is their strategy. Because as far as media news is concerned, I think Sony is going to claim some damages for the breaking of deal. Most probable, scenario would be somebody coming in, as Soumitra was pointing out, two big corporate houses vying for this company. And if that happens, if that kind of news, something happens in the near future, that would be a major upside for the stock, for a major relief for the existing shareholder. But at this point of time, I would say one should avoid the stock. Somebody holding the shares should continue to hold for some more time, let clarity emerge, and then they can take an action.
Okay, so that's the fundamental take coming in on Z Entertainment. But Kunal, coming to you, like Somit was mentioning, that more off late we have seen Z becoming a sort of a trading stock, very volatile movements coming in, and for today there was no chance for the investors actually to get out of this, because since the morning the stock was locked at a lower circuit. Any support levels that you are seeing for Z Entertainment, and what's your take on the charts?
Very good morning to all of you. See, my sense is that not to catch a falling life, there are more than 1,500 stocks listed on the NSE. You don't have to be just about fixated towards one stock because it's fallen by more than 15% so far today, and I think it's come back sub the 200 levels. I think even last time around when you had seen a similar kind of a price action for Z, the stock had actually fallen down from 250 levels to I think 125, 130 in a matter of few weeks. I think in 2020 end. I think, I'm not expecting a similar kind of a sell-off, but then, the stock would take a lot of time to get into recovery. Maybe I think the stock would probably lie low, over weeks and months to come by. So I think why invest the hard money into, such kind of names, especially when it's going into a very sharp kind of a negative downtrend. So I would suggest an avoid on Z. And my sense is that, one should try and stay away, not look to catch the falling knife.
All right, avoid catching a falling knife is what Kunal has to say on Z. On that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking your query and briefly talk about the railway stocks. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get you answers for all of your stock-related queries. Yes, we were supposed to discuss the railway stocks in our lens segment, but the move in Z Entertainment made us actually focus on that particular counter first. But yes, we are trying to now decode what's exactly happening in the railway counters. And in fact, we have our experts today, Kunal Bothra, as well as Rajesh Agarwal. And let me actually kickstart with this discussion with actually all the queries that are already pouring in for railway stocks. We have one coming in from Sridhar, whether he wants to know if he can now look to enter IRFC and IRCTC at current levels for the long term. You have even Srinath also wants to know that given the fact that today you're seeing a reversal in the railway counters, is it the right opportunity or the right time to buy into these counters? Even Sangeeta wants to know, fundamentally, do you think the railway stocks are a place to be if entered right now? So the floor is open. What's your take, Rajesh? Do you think fundamentally the valuations that these companies are trading at make sense for somebody to enter right now, or should wait for some more time, given the fact that all of these stocks have already seen a parabolic rally, isn't it?
You said it right, Cheryl. They have witnessed parabolic rise. Railway stocks were on a joyride. They were moving like anything in the last few months or few quarters, I would say. Many of the stocks have become 10 beggars, 5 beggars, 10 beggars, like that. Even in the last 1 month or so, some of the stocks, if I'm not wrong, has gone up by 50-60%. That's mind-boggling. Valuations have become overstretched despite the fact that these companies are sitting on a good order book, on future projections that a lot of new orders for wagons, railways, modernization of tracks, modernization of stations, and new launches of trains would take place, but the valuations have gone above the roof. But still, I won't say that the party is still over. It might be some sort of profit booking, but for a new entry, I would say only few stocks which are on a better valuation, I would say, or they have not run up that much, would be a better choice. One of them being IRCTC. It's basically into 4 divisions: ticketing, rail near, catering, and tourism, and all of them are doing well. The numbers have been pretty well. It's a debt-free company. Launching of Tejas and Vande Bharat would be a boon to them. Tie-up with Zomato is another positive point. They have decided to move out of railway catering, that was the non-railway catering, to do. And these are some of the things that are going to do going to give good numbers in the coming years or so. And the best part, it's not run up like the way the other railway stocks have run up. So I would say IRCTC can be a good buy. Another one can be Texmaco Rail, where the order book is quite high, the numbers are doing well, and it has also not run up that lot. So you have to be very selective in this pocket. And yes, the story is still there, but some profit booking that has happened today might continue for some more time. So one has to be very cautious, cautiously positive, I would say. We are into these this sector, and one can pick and choose once some more amount of correction takes place.
The valuations look a bit overstretched at this point in time. Wait for some corrections, and IRCTC and Texmaco Rail could be better bets out of the whole railway pack. But Kunal, coming to you, because we have seen a lot of these breakout happening in these railway stocks. But as of now, do they also look overstretched in terms of the technical chart pattern, and any of the stock you still like at this point in time?
Well, yeah, definitely. I think the space is overstretched, overbought. There are many indicators which are suggesting that the stocks have run up exceedingly high. You're seeing the stocks at a 200% divergence from their 200 moving averages. For example, IRFC, the 200 DMA is still around 60 rupees, and the stock made a high of, I think, 180 approximately. That means a divergence of more than 200% for the stock from its long-term averages. These are exaggerated kind of moves. So I would suggest to stay away from the space. Even after the last 2 weeks of a 30-40% rally into these stocks, because on the way down, when these stocks go into a sharp correction, the correction could be severe for these names. So not to just venture because these stocks have corrected 5% from their yesterday's or Saturday's closing levels. I would believe that wait out for a significant bout of correction for these stocks. Only then I think one should look to venture in, not at current levels.
Do not venture in at current levels. Wait for a significant bout of correction in case you are looking at the space right now. But Kunal, if somebody is already making profit, book partial profits or complete profits?
I think it makes sense to book full profits over here because of the exaggerated indicators the stocks are showcasing.
All right, so that's the take coming in from both of our experts when it comes particularly to the railway space. But on that note, let's kickstart with taking rest other queries then. And this one is coming from Murthy. He's writing to us from Sikandrabad, and Kunal, he wants to know whether he can look to buy Maharaja Batteries and also Heritage Foods. How does both of these counters look on the charts?
So yeah, I think Maharaja Battery looks attractive. In fact, Maharaja Battery, Excite, both are the stocks which have done reasonably well. Maharaja has come back above that 800 levels. What I like about the stock in the last 1 or 2 weeks is the resilience the stock has shown. So I think it's been hovering around this 800 levels for the last 1 to 2 weeks. That also is a strong indicator for the stock. Even for Heritage Foods, so I think the stock has come back into a breakout of a bullish flag pattern. The stock has good support at 300 levels. So maybe closer to 300 if in case you're looking to buy. I think that could be a very good level to maybe buy or add.
All right, moving on to the next one, and the next query that I have, Rajesh is from Imtiaz from Kolkata, and he wants to know, can he go ahead and buy HUL at current market price? The results were not that great and the stock also saw a negative reaction, but good time to enter.
See, it's a large cap stock with a very vast portfolio of products, some of them strong brand names. So these kind of stocks are the best held for long-term portfolio. By long-term, I mean by 2 years, 3 years down the line. So these kind of correction for 1 quarter or 2 quarter results are good opportunity for long-term investor. But I would say wait for around 2350. That would be a comfortable level to buy.
All right, let's just quickly mark Z because now it is locked on in the lower circuit of about 20% as we speak. Remember at 11 a.m. the circuit was revised to 15%. Now the Z stock has fallen more, 20% lower circuit coming in for that particular counter. Rajiv has a query. He has 500 shares of HOEC at 115 rupees per share, Kunal, and NMDC 500 shares at 210 rupees per share. Should he stay put in both of these counters, HOEC and NMDC?
Well, I think it's a good time to book our profits on HOEC. For NMDC, you can continue to hold on. HOEC, I think, has come back into a resistance zone around the 189 200 mark. So I think that's the resistance the stock has been journeying towards since the last couple of weeks. So I think it's a good time to try and book out profits over here. NMDC you can hold if you're a long-term investor. My longer-term targets for the stock for NMDC is closer to 280 to 300 plus.
All right, Kunal, coming to you for the next query. This one is from CG from Karnataka, and he wants a short-term advice on Rama Steel Tubes as well as HFCL. I'm not sure whether you track these counters or not, but for Rama Steel Tubes, the stock is trading at an all-time high level. So, on the short-term time frame, would you suggest to enter at current market price?
Not at current prices. In fact, even though these stocks have confirmed a breakout, but you have to look at the overall market construct. These are the kind of stocks which tend to give you a late breakout, but then they would probably get into a retesting of the neckline of the breakout and then maybe fall a bit lower. So I think for both of the stocks, HFCL as well as for Rama Steel, I would suggest to wait out for a correction, maybe a retest of the previous swing lows. For example, for HFCL, that's closer to sub 90 levels, and for Rama Steel, I think that level is closer to 40-42 levels. So I think these are the 2 points which you can look to buy these stocks if you're looking to add.
All right, let me take this next query then. This one is coming in from Narsimha Murthy, who has First Source, about 300 shares of this counter at an average price of 152 rupees per share. What's your take on this stock, Rajesh, given the fact that the viewer is wanting to know whether he should stay put with this or look to exit?
I think one should stay put. The numbers have been pretty good in the last few quarters. The BPO business doing well. I think one could continue to hold FSL.
Okay, Rajesh, coming to you for the next query as well. This one is from Pradeep from Kolkata. He's holding 10 shares of India Mart and his buying price is 1960 rupees. He's still at a profit and wants to keep it for the next 1 to 2 years. So what will be your advice?
See, at this point of time, I think the valuations are overstretched for India Mart. The numbers are not that exciting. One should buy better. Since the gentleman is sitting on a profit, it would be advisable to book out profit. And if it corrects corrects to around 2000, 2100 odd level, then he can re-enter. But at this time of point, one should book profit.
All right, this next one, Kunal, is coming particularly for you. Vishwas from Bangalore has given a slew of a lot of actually banking names, whether he should invest in them or no. From the PSU space, he's asked whether he should look to invest in SBI and Canara Bank, while on the private bank, and that also he's asked about DCB and Utkar Small Finance Bank.
Yeah, I think these stocks could be attractive buys, specifically on the PSU names, PSU banking stocks. I would believe that the momentum has shifted back from private sector names towards the PSU stocks. So you can consider buying SBI, Canara Bank. They are formidable performers from the PSU banking lot. From the private sector names, I think DCB Bank could be a better bet. The stock has come back towards a mild corrective phase from 160 to now 145 approximately. Maybe another a few percentage points on the lower side, say closer to 140, 142 could be a good buying zone for DCB Bank.
All right, moving on to the next one. And Kunal, this query is from Reema and she wants a short-term view on any of the 3 counters you like at this point in time for a fresh investment. She has names like KP Energy, Silcha Tech, I'm not sure whether you track this one or not, and the third one is Indus Star. So any stock that you like at this point in time for a fresh entry?
So I think out of the 3, Indus Star is something which I do like, and in fact I recommended also last week. When the stock was at lower end of the support territory around the 212 or 214 mark. So I think that was a point where I had mentioned that the stock may come back towards the upper end of the trend line, which is closer to 222 to 225 levels for Indus Star. If it manages to surpass this 225 mark, so it's trying to attempt today, but hopefully in the next couple of days, you might see an eventual breakout towards 225 mark. If that happens, I think we could be looking at least a 10 to 15 pointer gain on Indus Star. So I think it's a stock which you can consider buying closer to or maybe about 225 could be a better zone of conviction for the stock in the near to medium term charts.
All right, let me just take a quick one coming from Guhan from Bangalore. He has PCBL, Kunal. He bought this stock last week itself. 327 was a buy price. Very short-term query, but okay, short-term query is 2 months. So he wants to know what's your advice.
So the charts on the short term, by short term I mean at least 1 to 3 month basis looks attractive for Philip Carbon. Currently the stock is down today, I think down by some 3-4 percentage points. It's managed to engulf the candlestick which it's seen for Saturday's session for PCBL. However, the charts on the medium term basis, near to medium term basis look attractive. So I would suggest to hold on to PCBL. If in case the stock comes back towards say 320, 325 mark, then we could be looking at a fresh round of momentum on the stock.
All right, that's the take on PCBL. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And continuing the same, Kunal, coming to you for the next one. This one is from Ravi from Vijayawada, and he wants a short term view and short term targets on IRB Infra. He's already holding 1,000 shares at a price of 48 rupees.
So I think I'm not sure by short term what time frame you're looking out for, but then I would probably suggest that maybe this could be a time where you may look to trim out these high beta stocks, the two-digit mid-cap names, because I think just because of the market construct, you may probably get into a phase where these mid-cap stocks can also get into a phase of correction. And the only other point is because you've entered late into the trend for the stock IRB at 48, the stock made higher 51 and now it's come back towards 49 levels. You could be at a point where the stock may get into a sharp correction first before it gets into a bounce. So I think it makes sense to either trail your stop loss to maybe cost on IRB Infra and then hold out in case if the stock manages to bounce back higher. I think that could be a good time when we look to book out profits. But if it falls below the cost price for you, I think it's a good time to have trailing stop loss and then exit the stock.
Right, Rajesh, this one is for you. Coming in from Gopinath, who's writing to us from Hyderabad. He has 120 shares of Zensar Technologies, which he's purchased at a level of 490 rupees per share. He wants a 2 to 3 year perspective on this one, and is it worth holding on to?
Continue to hold. I don't know about 2 to 3 years because these kind of mid cap stocks should be monitored on quarter to quarter basis. But as far as at this point of time, I think it's worth holding. We have a medium term target. By medium term, I mean 6 to 9 months target of 600 plus rupees. So continue to hold the stocks and keep monitoring quarter by quarter.
All right, Kunal, the next query is coming from Nagesh from Bangalore, and he has bought a Nifty 21,600 call options, and he's at a 18,000 loss at this point in time. That's January expiry. Should he continue holding this one? What will be your advice?
Well, I don't think so because I think the index is now getting into a clear case of a corrective corrective mode. So in fact in the morning I suggested that about 21,700 if the index closing I think closes, then that's going to be a zone where one could look to buy. We managed to just had a touch and go moments towards 21,700 mark, and now we are in touching distance of breaking below 21,500 level. So that's a clear sign of weakness. I would suggest to exit the position on the call option side, specifically if it's a Jan expiry.
Okay, a quick one coming in for you. Rajesh Chandrasekhar wants to know about Quest Corp. 500 shares at an average cost of 740 rupees per share. Sharp fall that this particular counter has seen from his buy price. Any scope of reversal? He's ready to hold on for the next 2 years if need be, given the fundamentals he believes is still good.
I also believe that it's still good. Looking at the fundamentals, the company is doing very well. The staffing business is doing well. They have come out of their football business. Numbers were very good. Balance sheet is very strong. It stands out on every parameter. Yes, it can fall some more because of market conditions or if the index goes for major correction. But still, fundamentals are a very sound stock. One should continue to hold.
All right, that's the view on Quest Corp. But with this, viewers, it's once again time to step into a very short break. Don't go anywhere. We'll be right back.
Buy now, sell now on ET now, and doesn't look like a great picture when it comes to the benchmark. And you see sharp fall undertaking right now, 1.3% downtick from the day's high for the Nifty Bank. That's where the fall is much sharper. If you look at the Nifty Bank, I think it's approximately 2% from the day's high that has been erased when it comes to the Nifty Bank. You have Z now locked in the lower circuit of about 25%, and it doesn't look pretty when it comes to any of the banking names. There's major banking names, be HDFC Bank, Axis Bank, IndusInd Bank, or for the matter of fact, AU Small Finance Bank also. That one is seeing a sharp fall in today's trading session. But talking about banks, we have Tamilnad Mercantile Bank that is in focus in today's trading session, and we have now S. Krishnan, who is the MD and CEO at the bank, joining us to talk about the way forward coming in for the bank as well as their Q3 earnings. A very good morning to you, sir. Thank you so much for joining us in ET now. And firstly, let's take a look at the operational data when it comes to Q3. Your interest expenses, that's on uptick approximately 44% on a year-on-year basis. That in fact actually led to pushing, or rather making sure that your net interest income growth actually came in much lower. If you would tell us what's your outlook when it comes to the interest expense from here on, and do you think that this will actually stay elevated for the next quarter as well?
See, the interest expenditure was elevated because you know that across the industry, there is a tight money position. The cost of funds have increased in the entire industry subsequent to the last December. So we are comparing year on year, and then we say that the net interest income there is a muted. As you rightly observed, it is due to the increase in the cost of deposits. What I expect is maybe for a quarter or so, the same level will continue. I don't expect that there will be much more increase, while there may be a marginal increase, but still, I will only say that let us look into the other aspect, what the margin we have, the net interest margin, if you look into, we had a net interest margin of 4.1 during the previous quarter, that is sequential quarter. For the quarter ended September, we had net interest margin of 4.1, and it has marginally come down by 2 bips. I expect that the cost of deposits will continue to be at the same level. Maybe a marginal increase is expected, not much high in the overall cost of deposits. And the guidance given by me to the market about the net interest margin, the NIM, is above 4. We stand by that. We will continue to be. We are comfortably at 4.08 as of now.
Hi, very good morning, Mr. Krishnan. This is Shrishti also joining in. While we saw the elevated interest cost, we also witnessed a fall in the provision. Credit cost was at a multi-quarter low levels. What led to this decline, and how should one expect this number going forward?
See, the credit cost will continue. We gave the guidance of credit cost of around 0.5 to 0.75. That is what the guidance we gave to the street at the beginning of the year. You can very well see that the credit cost is much contained, except for the last quarter, where the credit cost was little higher due to one of account which is big for our bank size, slipped in the Q2. That is the reason the credit cost in Q2 went up. Otherwise, the credit cost is much under the control. I expect that for the year, what we gave the guidance of 0.5 to 0.75 is very, very comfortable. We will be able to contain with that. 9 months credit cost comes to around 4.46 or so. So I don't expect any increase from that level.
Right. We saw the NPAs actually that were low in this quarter, but specifically we saw some additions coming in from the retail and MSME book. But will we see NPAs reducing further on, and also if further on, in fact, to the levels that we had seen in Q4 of FY23?
See, I expect that the NPAs may go down in the quarters to come. That is what is my expectation. Particularly in the Q4, I don't expect much of the slippages. The recoveries and upgradations will be definitely equal or more than that. So, question of the NPA maintaining here is very, very comfortable. And as you observe, the NPA of 1.69, which is a very minimal gross NPA, will be improved further in Q4.
And lastly, Mr. Krishnan, wanted to understand that for the company, any plans of adding new branches that would like you to share, and any geographical expansion that you are targeting for?
See, we had planned for opening about 50 branches during this current fiscal 23-24, of which in the 9 months initially we have opened 17 branches. The other branches are in opening or in the advanced stage, like the premises getting ready, the furnishings going on. So I expect that by end of the year, I expect that I will be able to open the remaining 33 branches. As far as the geographical is concerned, if I look into 17 branches what we have opened, out of 17 are outside Tamil Nadu and the remaining 15 are in Tamil Nadu. I have been telling the viewers, the channel earlier also, that though I have large number of presence in Tamil Nadu, but even that, I have not been in some of the prime places where there are good potential in Tamil Nadu itself. So we are expanding to those places. We are also expanding to other parts of the country wherever the potential is there. In fact, last fiscal, at the end of the last fiscal, we expanded to the northeast. We opened a branch at Guwahati. So we have been doing that. The whole idea is that over the period of time, we want to make this bank as a pan-India bank.
All right. Thank you so much, Mr. Krishnan, for joining us on the show to talk about Tamilnad Mercantile Bank's way forward going ahead and how the Q3 also transpired. That was the MD and CEO of Tamilnad Mercantile Bank. But let's shift focus now to a budget exclusive, and government is likely to hike the insurance cover under Aayushman Bharat scheme. ET now has learned from sources that the health insurance cover under the scheme will be hiked from 5 lakh rupees to at least 10 lakh rupees per family. My colleague Anurag Shah is here with all the details. And Anurag, what is the latest that you're picking up with this regard? This will be actually a game changer when it comes to the healthcare sector, isn't it?
So, under the Aayushman Bharat scheme, in upcoming budget, government is likely to increase the scope and coverage of Aayushman Bharat scheme. Presently, the Aayushman Bharat scheme covers around 10 crore family and gave a coverage of 5 lakh rupees. But as per our sources, in budget, there is a likely to be announcement will be there that limit of 5 lakh will increase and it will be at least 10 lakh. So it can go up to 15 lakh also, but it's likely to be increased up to at least 10 lakh rupees per family insurance coverage. Because the rationale behind this is that in last state assembly election, we have seen that parties have announced that insurance coverage up to 10 lakh, 15 lakh, 25 lakh. So that supports the claim that Aayushman Bharat coverage will increase from 5 lakh to at least 10 lakh. Apart from that, presently it covers only families which are under the BPL criteria, below poverty line. So government may announce the extension of the coverage, which may include gig workers, MSME, unorganized sector worker, senior citizen can also be included in this scheme. And for senior citizen, as per our sources, there may be an announcement of standard health insurance policy on which insurance companies are also working. So that because presently it's very difficult for senior citizen to avail a health insurance coverage because premium rates are too high and there are very few insurance company which offer health insurance policies for senior citizen. Even if they are offering, the premium rates are too high and unaffordable for senior citizens. So there will be private hospitals has also agreed on the dedicated standard packages for the treatment under the Aayushman Bharat scheme. So in upcoming budget, we'll see a couple of announcements related to the Aayushman Bharat scheme, which will enhance the coverage and scope of insurance.
Well, thank you so much, Anurag, for getting us that exclusive. So all eyes on the upcoming budget announcement related to the health insurance space, and that's the 18-hour exclusive we got for you regarding this sector. But with this, viewers, it's time to wrap this edition of Buy Now Sell Now. It's a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for watching. But before we go, let's take a shift to the World Economic Forum 2024, which was held at Davos, which counts